Good morning, folks, and welcome back to Almus Market Mornings. I've always found that markets have a lot of character. It's simply not a cause and effect kind of relationship playing out. There is a certain kind of depth that maybe comes from the tendency to forecast. So, if we look at equities, we are seeing industrials starting to do well in the US as sector rotation catches up. You may think it's a risk on sentiment, but no, even precious metals have moved up significantly. Oil prices have moved down. Chevron sending large amounts of ships to Venezuela to bring crude. Asian risk sentiment is a bit tapered as there are some tensions developing between China and Japan due to a Chinese export restrictions. So things overall are tricky. There is lots going on. JK, what is your sense? We are seeing dollar index remain somewhat resilient. Is it getting ripe for a rally from here?
Good morning, Swaraj. We are just into the first liquid period of New Year trading, and it's too early to conclude any particular trend because there are far too many things happening. Normally, as we step into a New Year trading, we are always flooded with huge amount of theories, forecasts, and sometimes even new developments. And this year has not been different. Except that no one would have anticipated the big political action right at the start of the year, with a lot of medium and long-term implications for economies, markets, and of course even the global power equations. In fact, most analysts feel that a new international no rules based approach is in fact developing, and it looks very ominous for going forward. But one thing that always sustains is that the strong trends that prevailed in the previous year usually continues with more vigor as traders and investors return to market with fresh risk appetite, and that's what we have seen in metals, particularly silver, which is already 15% higher from 2025 close. Saw a new high today. Platinum, that's 18% higher from December close. Gold's gain has actually really paled in comparison to these moves with just 4% rise this year. But then gold has already had a big rally last year. And major stock markets have continued their bull run, although, as you said, there has been a sector shift. I can even say that rupee's weakening trend has sustained in the new year, although the intensity has been less. And as far as other markets are concerned, dollar is struggling for direction, which is what it was experiencing towards last quarter of the year. Oil has been rangy, strong support at 60, and then 62, 63 offering very strong resistance as well. Of course, we have had some data to consume yesterday. In this week, of course, the Eurozone PM CPI numbers, sorry, CPI numbers, rather the German CPI number came yesterday. In fact, along with the French numbers, they were surprise to the negative side, or I would say it was on the slower CPI that we saw in Germany. The impact coming from food price inflation and also the energy related prices impacting it, and it came below 2% at 1.8%, and 2% has been the ECB's target as well. So, does it mean anything for the Eurozone interest rates? Not really, unless it sustains for a long period. As of now, the bar for a rate cut by ECB looks quite high. Therefore, we'll have to watch the price trends in the coming months before we can see that any change in the ECB policy is possible. Although the yields in Eurozone came off a bit, but nothing to really impact the euro dollar as well. And of course, we will be watching a slew of economic data from US and for starting today, the JOLTS data, the job openings and the quits rate, ADP private payrolls rate data, challenge job cuts and the weekly jobless claims tomorrow, as well as the all important non-farm payroll data on Friday. And I think these are likely more likely to set a direction for the market. And going by various Fed member statements recently, focus is more on inflation. They don't expect employment to deteriorate too much short in the short term. So in all likelihood, Fed rates could remain steady at least in January. and of course, we'll watch the CPI number next week, which will be the first reliable number that we will get. So that's the focus, start of data. And of course, we'll also have the ISM services number that will be, giving a picture of the current state of the economic activity. Economic activity in services side in Eurozone and UK also gave some, retreat yesterday. So none of this has actually impacted the dollar. It's still searching for a direction. As I said, look for this week's data for getting a sense of direction. Uh, Meanwhile, quite an uneasy statement from White House saying that Trump and his team are discussing a range of options for acquiring Greenland, and utilizing the military is always an option, and it's not giving any comfort to the investors. I think the rally that started in the market has been just a continuation of last year's rally, and perhaps some fresh money being put in by investors. But I think I'm not sure how much it is going to sustain in the current environment, as well as uncertain monetary policy. Fed might well hold its rates for quite some time now if inflation stays above 3% also, and valuation concerns still remain about US tech stocks. We are also heading into the last quarter earnings report, and as well as the full year earnings report for US, and that will be a determining factor for the market's direction as well. So we are in a stage where we are awaiting emergence of a new trend. Hopefully, it won't be a rangy market. For Rupee also, slightly more calm situation between 90 and 90.30. Slight tendency to appreciate yesterday on the back of some flows, but then those flows were easily getting absorbed. And once again, we are going to be above 90 for some time, and that is not good for the Rupee bulls, because the longer it stays above 90, there will be more tendency from importers to cover. There is no indication on the trade deal talks yielding any concrete result, nor from the FII's number, which has been negative for this month as well. And yesterday's PMI services survey on India also showed a deceleration. This is after even the manufacturing showed some deceleration. So there's nothing really, strong positive cue as far as Indian markets are concerned. In fact, the Indian stock markets also took some beating yesterday, while all the major markets were up. In fact, this year the emerging market index has gone up by almost 5%, while India has stayed almost at the same level where we ended 2025. Watching 90.50 as a key level for the rupee, where RBI may come back with some intervention effort. However, to change the rupee's sentiment or the direction, we need a very strong positive trigger. Although investors do look at upcoming budget for some market-oriented reforms possibly. So I think it's a long wait for rupee to see any bullish tendency. But otherwise, weakening trend is the natural course, subject of course to RBI intervention. Thank you.
Thank you, JK. And just quickly summarizing on the geopolitical front, the Greenland issue is again propping up. White House considering a range of options for Greenland. President Trump has a keen eye on that because of strategic reasons, geopolitical strategic reasons. Otherwise, we have a whole host of labor market data starting today from the US, concluding with NFP on Friday. That would be an attention. And when it comes to rupee, we are comfortably trading between 90 and 90.30. But as JK mentioned, the longer it stays above 90 levels, it will invite importers to cover, and that might become some sort of a base. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.